I could do it professionally and have, all of the credentialing that I would need to
Right.
actually sell the product and the service.
Interesting. We do have a very turbulent time in investing
Mm-hmm.
right now, more than ever. The past probably, 6 years have just been very up and down.
Mm-hmm.
So that probably requires a lot of like mental fortitude, I would say. Maybe not focus necessarily, but like, you know,
Mm-hmm.
staying with your process, keeping to your plan, as does powerlifting.
Mm-hmm.
So how do you think that mental toughness is a balance between both?
Yeah. The So I kind of think about the investing. There's been sort of two periods that I've experienced, and there's always volatility, but I followed it pretty closely from about 2015 to through basically 2015 to before COVID. There wasn't anywhere near the dramatic ups and downs that there are now. I feel like COVID was kind of the start of that. I think there are way more just average people investing. So I think there's a lot more market participants, and that's been kind of the rise of the meme stocks, and more recently the AI craze. All these big technology companies that have gotten absolutely massive for good reason in some cases. So there's just more dramatic swings than there used to be, and that's one of those things that I think you have to experience it as an investor once you go through a period where you see red day after red day after red day, and you stick to your process, and you come out on the other side of that way ahead of where you started because you plugged in money as it was going down, and you just stuck to the process that you had. You get to the other side of it, and again, you're way ahead of where you were. And I think the same thing happens in powerlifting. And Bryant, you probably know this,
Yeah.
you know this better than I do more recently. You had a pretty long stretch of training where you just kind of had to go in and plug in and go through the process, and now you're starting to reap the benefits of all that hard work you did when things weren't going quite so well.
Yeah, shit sucks. I guess the biggest difference there is one is like very, very active, and the other requires you to be very proactive.
Yeah.
You can't really just continue to, especially in the volatility that we have now, is like you cannot look at it all the time. And when it comes to
No.
investing, because that's
No.
when you really start sweating bullets. And
Yeah.
when you're talking about like injury recovery in the gym, it's almost the opposite, where you have to be like very active and
Mm-hmm.
dot your I's, cross your T's constantly.
Yeah. Yeah. So I would say it's mostly just stick to the process and just
Yeah.
take a long-term view of both. There's going to be ups and downs. Don't get too emotionally high. I think if somebody watched me lift in the gym, they wouldn't be able to tell if I was really upset with the set or really happy with the set based on my reaction. And
Right.
I think if you apply that mentality to your portfolio as well, you will find a much better balance. Don't get, celebrate the wins, but you don't have to, you don't have to scream it from the rooftop and, or throw yourself off the rooftop when you see your portfolio
Yeah, yeah.
down.
Right.
Just ride the roller coaster. Don't jump off of it.
Ride the roller coaster, the investment
Yep.
roller coaster.
You only die if you jump off. So just stay
Yeah,
on.
this is true. And that happened. When's the last time that happened? 2008?
What, like a really?
When people were like jumping off rooftops.
Oh yeah, that
Or,
one. I was thankfully. I remember my dad. I remember him getting some statements in the mail from his investments at that time, but I was too young to really appreciate what
yeah,
any of it meant. And I remember how disappointed he was in some of those results. But even COVID, I think the market, if we use the S&P 500 as a proxy, I think it probably dropped 20% during COVID, and then its lowest point in 2022 when the Fed was increasing rates, it was probably 20 to 22% as well. 08, 09, it dropped 50%. So double the drop, and it was down for a much longer period of time. So we haven't had that bad of a sort of down market cycle as that was.
right. I think maybe the closest thing recently would be like the crypto stuff, which
Yeah.
But I mean, they kind of deserved it. Is what it is. Talking about people on 4chan and Reddit. Who cares? They're not
Yeah,
really people.
I don't really have a. I think people assume I'm going to have like a really negative view of crypto, but I don't know that I know enough about it to have a negative view.
Mm-hmm.
You know, it's like one of Warren Buffett's, one of his famous investing philosophies was kind of staying within your circle of competence. And Bitcoin and any sort of digital currency, I kind of put in the too hard pile. Like I don't really understand it, and I don't really need to understand it.
Yeah.
I think we will get to our financial goals. We will achieve financial freedom without needing to include Bitcoin. And
I was going to add to that, or kind of quantify it and say, the problem is I don't think anyone knows. You know,
no. Well, what happens is people buy it, you know, and they couldn't give you a 30-second elevator speech as to why they bought it. It was just FOMO. And they would say, well, I bought it and that sucker went up and I sold it and I made a couple $100. So Bitcoin must be great, you know, and it's, if that's your investment philosophy, it's going to be a long ride. You're going to have fun. Let's just put it that way.
I really don't know if I heard this from somewhere, but I don't think I hear anyone else saying it. But to me, day trading specifically, but investing is more like white collar gambling.
Oh, for sure. 100%.
That's what I always call it. I don't know why. I don't know if I heard that somewhere, but I always just feel like, you know, you got these guys that go take whatever money they can, throw it in the casino, put it all on red, let it ride, baby. Or you have these guys who put it all on, you know, Bitcoin or whatever penny stock they can find.
Yep.
They put their mortgage on it.
It's the same symptom. You know, it's just a different addiction, I guess.
Yes.
It's funny too. Shelby and I just went to the mountains, and there's a casino it's just outside of Asheville in a place called Whittier. And I'd never been to a casino before. And I took out $100 cash and I was like, I'm going to play this. And when it's gone, it's gone. And I was playing just one of the slot machines. And I put $20 in and I'd gotten up to $50. And Shelby was like, I wanted to cash it out and just leave, take $30 home, come out in the green, 30%. I mean, that's pretty good work for, you know, an hour of your time. But she was like, no, play it. You know, an hour and 40 minutes later, $0.
That's pretty good timing, though.
And I mean, it was fun. It was a great experience, but it really highlighted just how I don't have an issue taking risk, having a 100% equity portfolio, because I understand why I'm invested in what I'm invested in, and I believe in that long term, and I think it will work. You know, there may be degrees at how well it works over the next 30 years, but it will be fine. But taking $100 out that I know is going to evaporate is extremely difficult.
Yeah.
I don't think twice about investing hundreds of thousands of dollars in these funds, but $100 that caused me some reflux. So
yeah, I'm the same way. I went to a casino a long time ago and went with 3 of my buddies, and I didn't gamble anything. I didn't have the money to gamble at the time, so I was like, yeah, I'm just gonna hang out. Free drinks on the floor. Looks like I'm doing something. It's great. And then 2 of my buddies sit at a slot machine. So like they sit beside each other on the same slot. One loses all $500 that he brought. The other wins $500 in his first 20. So it was kind of like, it was so funny to watch because they're on the exact same machine right beside each other.
Yep.
Like, you know.
And they didn't do anything differently.
Nope.
It was just pure chance.
Just be like that.
Yeah.
That's why I don't go.
No. Yeah. It was a fun experience. It was kind of, I don't know, it was a little sad. Like I think if you look around at the people, and not to pass judgment on how people choose to spend their time and their money, but it didn't appear that most of them had probably didn't have a lot of excess cash to begin with. And so it felt a little sleazy to me, honestly. I don't know if it's something I would do again, but I'm certainly.
It is sleazy. And that right there is a good example of you being the nicest guy in Alabama powerlifting, because I'm laughing. I think it's hilarious. You know,
Oh,
it's no fault of mine that they're there. So I mean, I can't.
that's true.
And if you know anything about gamblers, you're not the one that's going to be able to get them off that machine.
That is also true. Yeah.
The one I went to was amazing because it didn't make me sad. It kind of was like a, I don't know, realization or something. But we went to the Golden Moon in Columbus, Mississippi, and there was just like a retirement community had let out.
Yep.
Oxygen tanks rolling around. I was like, this is fucking awesome. I don't know if they had the money for it, but I mean, they were literally bones. I mean, I don't know how they were walking around. It was probably zombies, actually.
Yeah. Yeah. It was eye opening for sure.
I think it was my my cousin's grandmother. She used to go to the casino literally every week. She'd go every single week from Alabaster, Alabama. She'd go to the casino, and she got a ride back from somewhere with, and my cousin was driving her, or she was driving him to the hospital or something. He broke his ankle, and she was like, "You know, your grandfather would be rolling over his grave if he knew how much money I was gambling." She just did it every single week. So
Yeah.
good. I love it. I love it. I think that's how some people are investing. I mean, they just are. Especially since 2020. Like you said, there's so many new people in with not limited knowledge.
Yeah.
They use Reddit. That's kind of it.
Yeah. And that's another big change that I've seen since I've been doing this for 10 years, which in the grand scheme of things is not that long, but the brokerage services are much easier to use than they used to be. You also have commission-free trading. When I got started, if you were buying and selling individual stocks, a lot of the brokers charged a fee on the buy and the sell side. Wow. So if you bought a stock, you had to factor in, if it's a $7 buy commission and a $7 sell commission, that's going to cut into your profits. But Robinhood sort of, I think they were the first commission-free broker, and all of these others followed suit.
Yeah.
I use Fidelity predominantly, and Fidelity's copied them. They do commission-free trading. They do fractional shares. They've made it super easy for people to get into the market, which is a good thing and a bad thing.
Yeah.
I think it's made it way easier, but it's also made it way easier for people to lose a lot of money. So.
Yeah, I think it's because it goes along the same lines as a gambling addiction. I mean, you just see,
100%.
oh, I'm seeing red, buying. Oh, it's green, selling. It seems that easy.